Here we go. Here we go. Here we go again. Girls, what's my weakness? Options. Okay, then. Here we go again. Getting in on this late today. It's Tuesday, May 9th, 2023, 11:58 a.m. on the Swatch Watch. That's the Central Standard Time out here in the farm fields of Valparaiso, Indiana. We're watching SPY make a little run right before our very eye. Little run up there. It was down to what? It was under 411. Now making its way up to 411.30. That is the SPY, S&P, Dow, NASDAQ, Russell 2000, and crude oil all in the red today. Red rum, red rum. So we got to take a look at some of our positions because I think we got some closing. We got some closing sales to do. Bank of America, that was a risky call that I put on. 13 contracts representing 1,300 shares. 28.50, but now it's sitting pretty only because Bank of America down today, downtown to 27.52. So our strike is safe. We want to keep that stock and continue to collect those divvies on Bank of America. Caterpillar is at 88% of full profit at $135 on this put credit spread, 3 contracts, $200 short leg, $195 long. We could roll the dice and take our chances. We could, but we probably won't. Let's look down here. So if we sold the 195 long leg, if we sold to close those, we would collect approximately $15 and then remove the bomb shelter, remove the safety net, and put all the risk on these $200 puts, and then maybe ride that out for the rest of the week with the Caterpillar. Wow, bad kitty being at 214.08. But why? Why do that when we can collect most all of our profit on this credit spread right now? Well, I shouldn't say that quite yet. We do have a huge discrepancy, a huge gap between bid and ask, 1 cent to 11 cents. We collected $153 on May 4th. May the 4th be with you. And today is what? What is today? We just said the date, Bart. It's May 9th. That's right. So that's only 5 days. What would we have to do? Looks like we're going to have to pay a little bit more. Oh, boy. Oh, boy. You want to pay $24 to get rid of this thing? My concern is the market's reaction to CPI, the market's reaction to the impending doom and gloom headlines that we're going to read regarding the debt ceiling. I don't want to mess around with that stuff when I could just put dollar bills in my pocket. And as we say around here, you don't go broke booking those profits. You don't go broke stuffing dollar bills in your sweet Levi 501 button fly jeans. Can't remember the last time I actually had 501 button fly jeans, but I definitely remember when they first came out. They were all the rage. We had to have them. That was right around the time I had to have those parachute pants also. All right, let's see if we can close this down right here. Release $1,500 in collateral and book a little profiteering. And there it is. So it cost us $21 is all. Let's do that Fantasyland math that we like to do, because this was a what? $5, it was a 4-day trade. No, 5-day trade. 5-a-day trade. And we collected $21 on $1,500 of collateral. So that's a 1.4% return in 5 days, but we do divide it by the 5, and then the Fantasyland math would be to annualize it. And then you end up with 102% return on collateral. We will take that every day. And how many times on Sunday? Twice on Sunday is how often we would take that profit. Who's up next? Step right up. Come on in. If you'd like to take the grand tour. If you know who sang that, well, drum roll, please. You're pretty cool. Leave that in the comments below if you know who sang the grand tour. Don't look it up. Just tell me if you know it. All right, so closing down. Ooh, the Costco. Costco is up to $500 bills today. And our short leg on this put credit spread is at 482.50. And it's telling us we're about 84% into our profitability and into the profit. We have 2 contracts on here. It looks like it'll cost us roughly $36 or so to close down this put credit spread, where we collected $222 for doing so. So I don't think we're too shy, right? He's so shy. That's not how the song goes. I think it's vain. You're so vain. Probably think this song is about you, don't you? Don't you? $38. It's worth it, isn't it, baby? I'm worth it. $38. $38, and then Fantasyland math would tell us that, hey, that's pretty good if we did that. Let's close it down. Let's close that down. Town to Chinatown for $38. Can we do that? Holding our collective breath. What do you say, Costco? I'm going to leave you on the board, or are you going to fill that out? We'll leave it on the board for the moment. Leave it on the board as a pending close right there. We'll let that Bank of America, we might roll that at the end of the week. We may let it expire at full profit. We may have to manage it in case Bank of America somehow turns things around. Dow, we're going to let Dow ride for now. It's not, I think it's, what is it at, 54? It's at 53.79, and our short is at 52. Dow doesn't move a whole lot, so we're banking on that fact. Let that ride maybe another day or two. Get a little bit more into the profit. Devon, we've got these $53 calls. Those are, Devon's going downtown Chinatown today, which we're going to talk about in a moment. In fact, we may talk about it on its own video. EOG, those are probably going to be called away at that number, aren't they? Nope, they're right at the border. Knock, knock, knocking on 115's door. EOG Resources at 114.48 as we speak, so we'll keep an eye on that as well. Going forward, Ford, look, it's at just about 91% profit, which is only $10. Thanks for the money. But that's okay. It was $10 that we didn't have prior to that trade. We put the Home Depot trade on yesterday, so it hasn't had a time to mature yet, but it's at 37.5% of profit. IBM will likely have to roll that put because it's under 122, I believe. It's at 121.34, and IBM, I don't think they have a dividend coming up that we need to be concerned with. Actually, they do. Actually, they do. So tomorrow they'll go ex-dividend date, or it is the ex-dividend date. So technically, it should drop again tomorrow by around $1.66. So we'll be in a little bit of hot water on that trade, but that's okay. We'll manage it properly. We'll do the best that we can. I used to tell that to the kids every day before they left for school. Do what you can, do the best you can. Do what you can, do the best you can. Make it a great day. And they'd roll their eyes and shuffle off to the bus. Dad's so corny. Well, one day you're going to look back and say, you know what? That's pretty good advice. Do what you can. And then while you're doing what you can, just do the best that you can. And typically when you do that, you have a great day. So back to the board. Okay, I just got notified that the Costco should be coming off of the board. We were able to close that. That was executed. So we closed that for profit. Johnson & Johnson will roll that again. Coca-Cola will roll that again. Those two have been fun. Just putting, $20, $30, $40 a week extra dough in my pocket just for rolling out the barrel. MetLife is taking real gas. It's under water right now. It's at like 54. Oh my, it's at 52. 52.69 current price on the MetLife. Come on, Snoopy, get your act together. So we'll be taking a close look at MetLife. When do they pay a dividend? I think may like dividends as much or more than collecting premium. I know that's blasphemous, right? All right, so today is ex-dividend date, so they are rightfully down today. We'll see what their bounce back looks like tomorrow. So we'll miss that dividend because, well, we don't own it. Somebody else owns it at the moment, and they may put those shares to us at the end of the week if we don't do anything about it. They definitely will because they'll be locking in their dividend and a sweet little profit based on current market value. So we'll have to look to determine what we want to do with MetLife. The Philip Morris calls, I made an aggressive move on those. We did have those on the board at $100. And then we actually rolled them down and up instead of the typical, which would be out and up. So we went down and changed our date from, I think, the 19th to the 12th. Yes, we did. Moved it to a $97 strike, just kind of rolling the dice and taking our chances. And so far, we're still looking pretty, still looking good at that. We'll be watching the Philip Morris because we don't want to lose those shares. We want to keep them. Both of these Qualcomms are got the bitter beer face going on right now, so those we'll have to manage because Qualcomm's like 106 maybe 106.10, and we've got these. How many of these? We got 2 contracts at 110, and I think the 3 contracts at 109. So we've got some overpriced action going on. Hey, I'll tell you what, you're only asking $106 for those. I'll give you 110. So we got to keep an eye on that. This is looking good. We can probably close that Starbucks. Me and lady friend, we worked out a little back bicep action today at the YMCA. Then we walked outside, and there's a Starbucks right by the YMCA. And I'm telling you, the line was wrapped around the building. I call that the eyeball test. I know what they do. They sell coffee. Sparkle Barbie, aka my wife, she buys enough of it. And every time I pass one of the 5 Starbucks locations in the town of Valparaiso, Indiana, 32,000 is the population, and there's 5 Starbucks. So do the math. That's 1 for every 4 people. That's not good math. It's close. So we'll close this right now. Starbucks currently trading at 106.63. They're down a little bit today. We got $100 on our shorty leg right there. So we can close. There's 4 of them. I don't think we're going to get it done at 2 cents right now. So we'll have to go the full asking on the 3. That'll cost us $12. It's still saying low likelihood, but that should just close out right there, releasing $1,200 bills. Then we could do Fantasyland math if it closes right now. Not sure why it isn't or hasn't. I guess the interest in that is probably low. But if we did $12, I'm going to leave those on the board until they do close. What did we collect on that? We collected $108, and that was May 3rd. Today is, did we say it was the 8th or the 9th? It's the 9th. Time flies, though, when you're having fun. Girls are out at Wyoming at the ranch. They got their first orientation training begins tomorrow. They'll have 2 full days of orientation / training, and then they're on their own. They're working. So that'll be interesting to hear back from them. So what was our math going to be? Let's find out right here and right now. So if we did 108 and it did cost us $12, right, to close it, we would be at a $96 profit on our $1,200 in collateral. That would be 8% in 6 days. So we divide that by 6 and then Fantasyland math, multiply it by 365. We'd be at 486% annualized return on that capital. Now, obviously, that is actually Fantasyland math, but yeah, math is our friend here with the options and the dividends. So we'll leave that on the pending board. That should close out according to my abacus-based brain. Target, we can probably close that one as well. What's Target at? They're trading at 156.70. We got the short leg at 150. We put how much on the board? $118 when we put this trade on. Looks like we can close it for 22. 22. And then get some of these off the board, clear them out before CPI and the other inflation-based reports come out, before the horrible headlines that should be out by the end of the day regarding the debt ceiling. The sky is falling. Because those politicians are just going to wedgie the heck out of us between now and when we actually risk defaulting. They'll be giving us the old wedgie, the wet willy in the ear, probably a swirly or two. And really, we dislike both sides, don't we? Get your act together. You work for us. Your job isn't to scare the bejesus out of us. But they will, and the media will love it because that's what sells the news. That's what sells the commercials. That's what sells the newspapers, all of that good stuff. So we should review this order, close this out for $22. Hey, that was only $400 in collaterals. There's one ringy-dingy sold. What about two? You going to leave me hanging with one contract still out there? I don't think so. I don't think so. Really, there's not a taker on that other contract. Let's do the math though. We're at 22 minus 118. So 118 minus 22. That's $96 profit. Didn't we already do this math? No, this one's different. That was Starbucks. This is almost the same math. No, it's not. It's going to be way different because it's only $400 in collateral. So 96 divided by 400 is 24%. Oh, so that is a wonderful return on collateral that we're looking for. And it was May 4th. So that's 5 days divided by 5 multiplied by 365. And that equals 1,752% return on collateral. Where are you? Why is there still just one contract hanging out there in the breeze? That seems crazy to me. So Starbucks still hasn't filled any. Target's filled one of the two to close those out. Okay. All right. So we got a couple Valeros that are calls that will expire this week, or we'll roll them out again. We put this aggressive Walgreens credit spread on, $31 short leg, and Walgreens is currently at $31.34. So what we might do if that threatens some more is we might pull the training wheels off. Of course, there's only $3 3 cents per. I was going to say we can pull the training wheels off, which would be to sell to close the 5 buys of the 29.50 long leg, and then ride the 31 out into the sunset, either at full profit or we are assigned those shares at $31. Okay, just got notified Target's second contract was filled, so that's completely closed at this moment. I don't know what Starbucks is waiting for. We went full boat on that. So we'll see. Keep an eye on that. But that is the update, or I should say that's the start of our look at the market today. I was looking at PayPal, not done looking at them yet. The market said, I don't like your earnings report. And the same with our friends over at Devon Energy. I was looking through the Devon Energy's earnings presentation, which can be found on their website. And one of the things I thought was very interesting, one, they're just kicking butt. They're kicking keister, yet their stock is going downtown to Chinatown. But what I found to be the most interesting, now again, I have a kind of a pea brain, but what I found very interesting in these slides, I mean, aside from some of the things that I love to see, which is, their focus on free cash flow. And you know how I feel about cash flow. I mean, money rule number one. Money rule number one. Money solves all of your money problems. Money rule number two. Cash flow is king, cash is queen, and debt is the it's the joker. So we love cash flow at the Bart Divvy household here at the Wealth Snowball So they have a combination of things, right? They got share buyback going on. They just implemented $3 billion in share buyback, and they've got their fixed plus variable dividend that I like to put in my pocket. They've been paying their quarterly dividend for 31 straight years. But the most fascinating part of this presentation that I saw is this. It's a couple of slides. One is this. Okay, so if we look at the dividend framework provides torque to higher oil prices. So this shows us the per barrel price with regard to their yield. Okay, so right now, we're sitting here under $80 a share, right? What are we at? 75? What are we? 72, 72.48 a barrel. Okay, and what Devin is saying is we are in this range with regard to yield. We can be way down here at $40 a barrel and still pay some yield to our shareholders. And I'm like, I'm a shareholder. I like that information. So where was that slide I was talking about? It's here somewhere, I'm telling you. Okay, this is another one that goes along with that. So at $70 a barrel, 8% free cash flow yield, $80 a barrel, 10% free cash flow. I have a feeling oil's going back to $80 a barrel this summer. We'll see. We'll see. Here's the other one. This is it. The break even funding. So if we look at these break even, here's the industry average right up here, just under $60 a barrel. And our friends over there at the Devon Energy, they're saying, well, we're more in this $40 a barrel range. So that made me feel pretty good as an investor in Devon Energy. And just looking through their whole report, I felt pretty good. But what do I know? Because the market's saying, no, 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 downtown to Chinatown. Currently at what? 49.12. 49.12. So I've got a bunch of positions out there pending with Devon. So I'll look to manage those. I don't know if I want to put any more on because I'm so exposed right now between Coterra Energy, EOG Resources, Marathon, ExxonMobil, Valero, if I hadn't said that already, and all of the above, all of which I still love, but the market's saying, I don't know, I'm scared. I'm scared, but I like all the reports. I've read through earnings reports. I've listened to highlights of earnings calls because sometimes those calls bore me to sleep. Wake me up when it gets excited, and it never does. So that's where we're at. Thanks for tuning in on this extra long video. Opening up today on Tuesday, May 9th, 2023, 12:20 p.m. Sweetheart is texting me from downstairs. What is she saying? Can you come help me downstairs for a minute, please? No, I'm busy. I'm talking to my new best friend in stocks, options, and dividends. So I'm going to go help the lady friend regroup, see what's up for the rest of the day here. And we'll continue to watch the market. Thanks for tuning in. Subscribe, like, comment, share this channel with a lovable friend, and I'll see you in the next video.